Have you ever wondered what are assets, liabilities, income, and expenses? These terms might scare you off initially if you do not have any accounting or finance background. In layman's terms, assets are what you own, liabilities are what you owe, incomes are money coming into your pocket, and expenses are money flowing out of your pocket. Hello, my friends. If you are new to this channel, my name is Keeley. I am a personal finance enthusiast and I make videos on personal finance as well as my portfolio updates. I also write articles on personal finance, psychology, and stocks. If you are interested in following me on my personal finance journey, do leave a like button and subscribe for more content. I write every week and I post videos every month. What are assets? Assets are items that can generate income or appreciate in market value. They can be shares, cars, artwork, watches, and even branded bags. There are also certain items that you can't see physically. We call them intangible assets. They can be knowledge, skills, and status. Next, liabilities are what you owe to other people. This can include bills, loans, cars, and even housing. For loans, they can either be good debt or bad debts. For loans to be considered good, it has to help you generate returns via leverage and using the concept of opportunity cost if you use it correctly. On the other hand, bad debts includes loans that you used to buy things that you do not need. In short, we want our assets to be more than our liabilities. So assets minus liability gives you your net worth. There are certain arbitrary benchmark made by other people that says that you have to have at least $100,000 by 30 years old or even $500,000 by the age of 40. Do yourself a favor, do not listen to them. Everyone lives according to their timeline and everyone's circumstances are very different. So there's no point in comparing with other people. Next, other than assets and liabilities, we have income and expenses. Incomes are money coming into your pocket and expenses are money flowing out from your pocket. It is important to track these four categories in your life. It gives you the overview of what you are lacking and where you are excelling at. I have a free Excel template for you to help you track these four categories in your life. Link is down in the description below. Different people have different opinions on what assets and liabilities are. An asset to you might be a liability to me. Most of us have a lot of possessions. To me, I only track assets that can appreciate in market value or to bring me potential income. Possessions like phone and computer will most likely depreciate in value once you use them. Technology is also rapidly improving, so your technology will definitely be depreciated very soon. If you buy your iPhone 13 today at $1,000, 2 years later, the price of the iPhone 13 might drop down to $600 only. This is called depreciation. Depreciation is a concept whereby your asset value decreases over time. Different people have different sets of definition for assets. Let's take car ownership for example. To me, a car is a depreciating asset. The cost of a car here in Singapore is very expensive. I am okay with taking the public transport on most days. If I were to get a car, I will need to factor in recurring expenses such as road tax, petrol, parking fee, and maintenance cost. Compared to that, it is very easy and convenient for me to take a cab with a touch of a button on my phone. However, for you, it might be different. You might get a car for your family. If you have young children or even elderly parents, it will be more convenient and easy for you to travel around using a private car as compared to taking the public transports. We can't put a price tag on convenience. By having your own private vehicle, you can even earn a living from driving Grab. Despite the car being a depreciating asset, to me, your circumstances states that a car will be better for you. Also, Don't be caught up in the status game. If you find yourself spending more than 50% of your income on your car, it is time to reorganize your priorities. Personally, I feel that intangible assets are way more valuable than normal assets. Intangible assets such as knowledge, skills, and even connection to other people can help you tremendously in your life. Having specific skills and knowledge enables you to solve unique problems and have an edge over others in your career. Having a lot of unique social connection also opens up to a lot of other opportunities. Next, we have liabilities. There are good debts and bad debts. Good debts are money owed for things that can generate income and build your wealth. This can be housing loan, student loan, and even business loans. This can help you achieve your financial goals in the future. They usually have much lower interest rates compared to credit cards. Bad debts are money owed for things such as consumable, entertainment, and even luxury. These are usually in the form of credit card bills which have very high interest rates. This interest adds up very fast over time, so remember to pay off your credit card bills on time. Having a credit card is good for your credit score. Paying off your credit card bills on time is good on your credit score. Credit score is used by the bank when you apply for loans. Any failure or late payments to your credit cards will negatively affect your credit score. If your credit score is low, you might find it hard for you to borrow the amount of money that you need. Next, income. For many people, the only source of income comes from the full-time employment. Our education system has drilled this into us. Study hard, get a good job, and money will come to you. Till date, we see many industries getting replaced by technology and machines. What works in the past might not be working right now. Upgrading yourself by acquiring new skills and knowledge will ensure you that you keep yourself ahead. Furthermore, it is now easier than ever to start your own side hustle. You can be a YouTuber, streamer, write your own articles, and even write your own books. All this can be done without much startup costs. If you own stocks, specifically dividend stocks, you are entitled to dividends, which can be a source of income for you. Investments such as bonds and real estates can also help you to generate consistent cash flow. Next, we have expenses. Have you ever wondered where your money is going to? You are very happy on your payday. But as time goes, you start to realize that the amount of money in your bank account starts to decrease. By the time you realize that, you are already praying for payday to come again. I've been there before, and it all changed when I downloaded an expense tracking app from the App Store. Yes, it is that simple. It is very convenient for me to track my expenses with a touch of a button. It only takes me less than 30 seconds to input my expense whenever I spend it. By having an expense tracking app, you are able to know at a glance where your money is going to throughout the month. This allows you to see where you are spending too much on and or too little on. Cutting down on your expenses is one way to save money. But if you don't enjoy life, what is the point of cutting down your expenses and scrimp on what you love the most? The best case scenario is to increase your income while you enjoy the same standard of living. In all, different people have very different opinions on what assets, liabilities, expense, and incomes are. Understanding yourself is the key here. You determine what is an asset, a liability, income, and expenses to you. I hope you learned something new today. If you like such content and is interested in following me on my personal finance journey, do leave a like button, subscribe, and turn on the notification bell. I post videos on personal finance and updates on my personal finance journey. I'll see you in the next video.